In this video, we're going to look at the cash basis versus the accrual basis. In accounting, companies will use one of the two following bases, which is really methods to prepare their financial statements. The first method is called the cash basis, and the second method is called the accrual basis. Under the cash basis, revenues are recognized when cash is received, and expenses are recognized when cash is paid. Again, revenues are recognized when cash is received, and expenses are recognized when cash is paid. In accounting, when we use the word recognized, it means when the item is recorded in the books of accounts. Let's take a look at an example. Pause the video, take a minute to read this, and then we'll go through it together. It says, on January 1st, a customer requests Jiffy Painting for a quote to paint an office. On January 3rd, Jiffy Painting quotes $8,000. On January 5th, Jiffy Painting paints the office and bills the customer $8,000. On January 28th, the customer sends a check for $4,000. It says, under the cash basis of accounting, when would Jiffy recognize the revenue? And how much revenue is recognized? So remember, recognize means record in the books of accounting. So pause the video and try to figure out when this company would record revenue under the cash basis of accounting. Under the cash basis, the company records revenue when the money is received. So when did they receive the money? If you look at all these information, they received the money, they received the check on January 28th. So January 28th is the day that they would recognize this revenue. How much revenue would they recognize? It would be the amount of the check, $4,000. Under the cash basis of accounting, this company would recognize $4,000 of revenue on January 28th. Now let's look at the accrual basis. Under the accrual basis, revenues are recognized when earned, and I'll explain what that means in a minute, and expenses are recognized when incurred. Again, we'll look at that in a minute. Recognized, just like before, means when the item is recorded in the books of accounts. So for revenue under the accrual basis, we said revenues are recognized when earned. Earned means when the company has delivered the goods or services. So when the company has performed their part, when they've done everything they're required to do, revenue is earned by the company. Also, note that this means when a company is using the accrual basis of accounting, the company is going to record revenue when it is earned regardless of when cash is received. It does not matter when the company receives the cash, the company will record their revenue when they have done their part. This rule is called the revenue recognition principle, and it's the GAAP rule. Let's take a look at an example. Again, it's the same example we looked at earlier for the cash basis. Pause the video, read the question, and let me know under the accrual basis of accounting, when would Jiffy recognize the revenue and how much revenue is recognized? Under the accrual basis of accounting, a company recognizes revenue when it's earned. When it's earned means when the company has done their part, whenever the company delivers the goods or provides a service. When did Jiffy Painting complete their job? If you look at the dates given, Jiffy Painting paints the office and bills the customer on January 5th. So for accrual basis of accounting, January 5th is the date that revenue will be recognized. How much revenue is recognized? It's the entire $8,000. They did their part. They did $8,000 worth of work. Therefore, on January 5th, Jiffy Painting will record revenue of $8,000. It does not matter that they didn't get paid on January 5th. We'll see how they account for that later on. And when on January 28th, when the customer sends in a check for $4,000, they're not going to record revenue of $4,000 because they've already recorded the revenue on January 5th for the $8,000. What they're going to do in January 28th is to record that they received the money. So whenever you're using the accrual basis of accounting, earning the revenue and receiving cash are two distinct separate transactions. They could be one and the same if cash is received immediately, but if not, we do split earning the revenue and recording the cash. And there's your answer. January 5th, recognizing $8,000 of revenue. Now let's look at expenses under the accrual basis. Under the accrual basis, expenses are recognized when incurred. What does incurred mean? Think of incurred as when the company uses the expenses. So, expenses are recognized in the period the company uses the expenses. And this may be different from when the company pays cash for those expenses. So keep that in mind. We are going to look at an example, but sometimes students have trouble understanding the difference between paying cash and recognizing when the company actually uses the expenses. So we will look at several examples of recognizing expenses. There is a name for this rule as well under GAAP. It's called the matching principle. Sometimes they also call it the expense recognition principle, but you'll see me using the term matching principle more often. Let's go look at an example. The question says, ABC company has a 5-day work week that runs from Monday to Friday. Employees are paid the following Monday. For the last week of December 2020, the salary expenses for the week were $5,000. December 31st fell on a Thursday. The $5,000 for the last week of December would be paid on Monday, January 4th, 2021. They want to know, under the accrual basis of accounting, what would be the salary expense for the last week of December 2020. I'm going to first draw a timeline so you understand the question. If I were to draw a timeline, here's a week. I'm going to split this into 5 sections. So here's 1, 2, 3, 4, and that's 5 days. So here's Monday, Tuesday, Wednesday, Thursday, and Friday. And then for whatever work was done this week, so somebody will work and the salaries for that week are $5,000. That $5,000 will get paid the following Monday. They're telling us that for 2020, December 3rd, the last week of December, ended on a Thursday. So it ended on a Thursday right here. So anything to the left of this is the year 2020, and anything to the right of this is year 2021. So the question says, what would be the salary expense for the last week of December 2020? So we know that this $5,000 was paid for the entire week, but the entire week was not for 2020. Part of it was for 2020, part of it was for 2021. So the question is, what part of this $5,000 belonged to 2020? Well, we could do that calculation. We know that $5,000 was the salary for how many days? 5 days, right? So if you divide 5,000 by 5, that gives you a salary of $1,000 a day. Now we could look at how many of these days belong to 2020 and figure out what would be the salary for the last week of 2020. Well, visually, we can see that there are 4 days, so it's easy. We've got 4 days times a salary of $1,000 per day. Therefore, $4,000 would belong to 2020, and the remaining $1,000 would belong to 2021. So what the company would do is they would recognize or record $4,000 of this $5,000 weekly salary for the year 2020. The remaining $1,000 would be the expense for 2021. That is the accrual basis of accounting. If you were using the cash basis of accounting, since the salary would be paid in 2021, that entire $5,000 would be recorded for 2021. Because remember, if you're using the cash basis of accounting, expenses are recognized when cash is paid. So if you were using the cash basis, the entire $5,000 would be recorded in 2021. But under the accrual basis, you're going to split that salary, $4,000 for 2020 and $1,000 for 2021. So to recap, under the accrual basis, expenses are recognized when they are incurred. It doesn't matter when we pay for those expenses, we recognize them in the period that the company uses the expenses. If companies are using GAAP to prepare financial statements, GAAP says you need to use the accrual method of accounting. Some companies use a cash basis, but that's only if they don't need to prepare GAAP financial statements. Any company that needs to be audited or any company that's publicly traded needs to prepare financial statements according to GAAP. And if they're preparing financial statements according to GAAP, they have to use the accrual method of accounting because it's a cruel world. Hopefully that'll make you remember which method to use. Who uses cash basis? Whenever companies prepare taxes or when they're a small company just starting off, they will use cash basis accounting. Cash basis accounting is not very accurate and it gives a distorted picture. That's why GAAP says always use accrual basis accounting. For the rest of the semester, we will be using accrual method for all our financial statements and to record the transactions. If you have any questions, please let me know. That's the end of this video.